Today we're going to do advanced technical analysis on 4 crypto assets: Uniswap, Casper with a K, Cardano, and Vanry network, really to help buy low and sell high, because we are looking to simplify the process, because every crypto pair tells a story, and if we can read that story, we can ride the trend. My name is Jagir Singh, featured in the best-selling book High Probability Trading Strategies back in 2008. Been trading the markets for over 18 years now. Also the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. And we're going to cover some pretty cool stuff today. So with that said, let's dive straight in. Diving straight in, we're going to start with Uniswap. We're going to heavily lean on Elliott wave theory to do all of our technical analysis, because we want to understand pattern structure. And it's one of the best ways that I've come across over the last 18 years on how to read buying and selling behavior in terms of highs and lows. So one of the things you want to be aware of with Elliott wave theory is that markets typically move in 5s and 3s. But what we have on our hands right now is the second most common type of correction. And there's a key thing that I want to bring to your attention with Uniswap. So more often than not, a typical correction is an A, B, C structure. And after a correction is complete, you'll typically get a nice new 5-wave move to the upside. That's most common. However, with Uniswap, what we've had this buying coming into the market over here, however, with no follow through. And then we had some follow through up here. But again, the price came back down into this range. That's what this dashed line is. That's a big sign of weakness. So when you look at Uniswap, what's more than likely is that we're still going to be sideways to down, and the price may even go below $3.53. It's not showing signs of strength. In fact, it's showing big signs of weakness. It's got an impulsive move down over here, and we're more than likely going to go below over here as well. So the correction is an A, B, C, a very long drawn out D with no follow through, and it looks like we're going to make a new low. And that's when we want to look at if we're going to see the end of a correction. By the way, if you're brand new to Elliott wave theory, I've actually created a cheat code that you can download in the link below. It will just help upskill you with some of the key fundamentals and the rules and guidelines when it comes to Elliott wave. But with that said, let's dive straight into the second chart, which is Casper. Looking at the price action with Casper, it's Casper with a K, so KAS with the ticker symbol, we have a nice 5-wave move to the upside. So remember what I said, markets typically move in 5s and 3s. This is a pretty clean 5-wave structure, and after a 5-wave structure, you should always anticipate a minimum of a 3-wave correction. Now, I've added some price and time projections with this using Fibonacci ratios, which is very accurate at reading buying and selling behavior. So the typical minimum price for a correction when you see a 5-wave structure is a 50% retracement. In other words, we measure the low to the high, and there's a retracement. That's 50%. And the price of that with Casper is 0.095. And we haven't quite hit that price yet. But the typical minimum time for a correction is 38.2%. In other words, we can measure how long did it take for this 5-wave structure to form. And then we can project forward in time 38.2%. And more often than not, that's the typical minimum time. Sometimes it can fall short, but I found it to be really, really reliable in pretty much all markets and all time frames. So the key thing with Casper over here is we are close to the minimum time, but we're not price, but we're not close to the minimum time. The minimum time, the date is the 8th of July. So what I would anticipate is, even though we're more than likely going to be sideways to up for a couple of weeks, it should only be a correction and then a further follow through to the downside, probably coming towards the range of 0.06 before we see a turnaround. But the key thing that you want to be doing with Casper is be on high alert to identify the end of the trend. So I'm just going to quickly draw on an ABC correction. This looks like the first leg down, B, and then a C. This is what you should anticipate. Doesn't mean it's going to occur like this, but it's highly probable. And the key thing is to identify the end of this wave C, because after an end of a wave C, you'll typically get a continuation of the former trend. And the former trend is this. So we're looking for a nice explosive move above 0.18 and probably by quite a decent amount. So that's the TA for Casper. So now let's go straight into Cardano. But before we do, I've created a Elliott Wave Masterclass, which is free training on YouTube just to give you the high level of Elliott waves, how you can combine it with price and momentum and a few other factors. So if some of this is going over your head, it might be worthwhile checking that video out and then coming forward and back to this analysis. So we're now looking at the price action and the pattern structure of Cardano, KDA. Now, my preference is to cherry pick what I'm going to trade, what I'm going to buy and sell. And if there's not a clean pattern structure, I like to just stand aside and look for the next opportunity. But what we have on our hands over here with KDA is a nice 5-wave structure. So on the upside, it's been pretty clean. It follows all the Elliott wave rules and guidelines. There's one of the rules with Elliott wave is that wave 4 cannot trade into the range of wave 1, and that qualifies. Wave 3 cannot be the shortest, that qualifies, and wave 2 cannot go below the beginning of wave 1, that qualifies. So it forms quite nicely. What I don't like about this pattern structure is this correction is pretty sloppy, which puts a big question mark on reading what the market is doing. So there's a couple of factors that we want to be aware of. Like we said previously, the minimum price is 50%, as in we should anticipate a correction of 50%, at least coming down to $1.23. Now, it's already done that already. It's gone below that amount. So it kind of gives us a tick box when we're looking at the price. Minimum time, we've also achieved the minimum time, come to the date of the 10th of May. But the thing we don't have is a clear pattern structure. Most corrections finish in a minimum of a 3-wave correction and looks more like this. Whereas this pattern structure looks pretty impulsive to the downside, and corrections don't typically finish in an impulsive structure. So what that indicates to me is that even though we've hit the price and the time, this might just be the first leg of the correction, and any move to the upside might just be a wave B, and then we might get a longer drawn out correction to the downside when we're looking at KDA. So more of a question mark over here. Again, more because of the pattern structure. I would consider taking a long trade setup on this if it unfolded, but what I'll do to be on the safer side is wait for an initial impulsive move. So it's like a nice, almost like a micro trend to the upside, wait for the first pullback, and then look to go long and then see how it unfolds. So KDA, the pattern, the price has been reached, the time has been reached, just the correction. Ideally, we want it to look more like this. This wave 4 correction is ideal. It's an overlapping wave structure. It's obvious, it's typical, it's common, so it's easier to read. Whereas this, it's like a big sell-off, and it's just very sharp, and it just kind of gives me a big question mark to kind of have a confident opinion of KDA. But that will be my take on it right now. So last but not least, let's go straight to Vanry and Vanry Chain, and we'll do the same TA. So we'll go straight in. So looking at Vanry Chain, I haven't actually put a wave count on this because, I like clean pattern structures. And sometimes 20, 30, 40% of the time, there's not a clean pattern structure. So we want to know when not to put a pattern on or draw your Elliott waves on the chart itself. So if I was to look at this, it does look like, an initial wave 1 of this recent move, a long drawn out sideways move for a wave 2. This looks like a pretty clean wave 3. But this is a pretty deep wave 4. Wave 4 typically are a maximum of 62%, and we can see we've gone below there. And another key thing is this looks like an overlapping wave structure, so we're probably going to get another low. So I've just got a big question mark on this because this might end up being that this is actually some type of ABC correction, and this is an impulsive move down, and we're going to make one more low before we see another move to the upside. So I would like to wait patiently for an obvious pattern structure before looking to trade this. Now, I would trade it, but what I would like to see first is probably this correction finishes, we get another move to the downside, and then I would like to see a nice 5-wave move to the upside, wait for the first pullback, and then look to pull the trigger if this occurs. And what I like to do is look at what's the minimum expectation that the market should do, even if we're wrong, and to make sure, if you're using a stop loss, to make sure you're break even or you've locked in some profits at that point. And then if it does take off, great, you make some great profits. But if it goes against you, you at least minimize your downside as well. So with Vanry Chain, I'm going to wait for a clearer, if someone said, look, Jiggy, you have to put a wave count on this right now, I would go, the best wave count I can see is the 1, 2, 3, not an ideal wave 4, a wave 4. But if this low gets exceeded, it might be a wave 4 down here, and then a wave 5. But the big question mark is this is a pretty steep wave 4, and wave 4s are more commonly 50%, maximum 62%, and we can see we're way below that again. And again, this three-wave structure, the other key thing to keep in mind is if the price goes below 0.068, that's a big red flag to say that's a big sign of weakness because it's done something called a wave overlap. If it does that, then we're probably going to get a new low beyond what we're seeing right now. There you have it. We've covered 4 key assets. Let me know what you want to look at next. And don't forget to like and subscribe to the channel so you get notification of when we do our next update. But do comment what you want me to look at next, and I'll see if I can get it added to the list and do some advanced TA for you.